Some home buyers are hoping to save on the cost of purchasing a home by just choosing a fixer-upper. Now, if you fall into this category of a buyer, you might be wondering if there are any VA loan options you can use to buy that fixer-upper. Now, in today's video, we'll be discussing VA rehab and renovation loans, including what they are, how they work, and if you can get one. Now, if you haven't noticed, I'm wearing red. Why? Because it's Friday, and here at Low VA Rates, we always wear red on Friday. By the way, speaking of red, down here to your right, please click in your screen, subscribe now, or follow, or whatever the red button says, and join with me every single Friday and wear red in support of the military. Now, before I forget, VA, rehab, and reno. Okay, that's for renovation. I guess I'll just put renovation. Sometimes in the industry, we shorten things, right? The rehab and reno loans, but renovation loans. People want to know about these things. We're getting lots of interest online about this because home prices are super high right now, and people think, hey, if I go buy a fixer-upper, I can save some money, maybe even actually make some money. Now, these products are allowed by the VA. It's a type of home loan that was created as the VA's response to FHA's 203K loan, which allows a borrower to purchase and repair a fixer-upper. Let's talk about how they work. On a VA rehab loan, you end up borrowing an amount that includes both the purchase price of that fixer-upper and the cost of the expected repairs. Add those two together, and that's what your loan amount is for. It's going to be based on the estimated as completed market value of your home. Okay, now in order for this value to be determined, you're going to need to gather itemized quotes from contractors on all the different improvements and repairs that you plan to make. Now, once you have the quotes, a VA-approved appraiser is going to review them and determine the home's future estimated value. Okay, so I'm just going to put that on here. It's the future estimated value. As you know, appraisals have to be done on VA homes. And on these fixer-uppers, if you just went and appraised the home before you did any of the work, no offense, but if you bought a fixer-upper, you're going to have a super low value, not to mention all the other issues that come with having a home that's not fit to live in. So with those estimates, there's kind of an equation that's done, and an appraiser that's been authorized by the VA is going to base your loan amount and everything that you can do based off of what he or she feels like the future value of that home will be once all the improvements are done. Now, like a more traditional VA purchase loan, the VA rehab loans don't require a down payment, and they also have no mortgage insurance. However, they do limit what types of improvements are able to be made. And these allowable improvements must improve the livability of the home. And though this is not an all-inclusive list, let me give you some ideas of what these improvements might include. For example, new windows, doors, or siding, right? Fixer-uppers, maybe the windows are smashed out, the doors are beaten up, siding's falling off. These are all things that on a VA renovation or rehab loan you could use the money for. You could add a new roof. You could put gutters on the house. Installing new HVAC systems is super important in these fixer-uppers. Again, it's not an all-inclusive list, so I'm just going to kind of put some bullet points on here as we go. A lot of people choose to improve the insulation, make the home more energy efficient, okay? Weatherize the home. You can use this loan to treat mold, okay? Get rid of lead paint, remove that, and then repaint. Repairing or replacing flooring, okay? I'll just not get too far ahead of myself, but paint removal, stuff like that. You could use it to fix plumbing, improve the electrical, the electrical portions of the home. Now there are some other limits. For example, one of those limits include a $50,000 cap on repairs. That's the most you can do on repairs. So you don't want to go get a fixer-upper that's going to need $200,000 worth of work. The VA rehab loan likely not going to work for you unless you have a bunch of cash laying around. Now, if there's no major structural work to be done, you can't do that. Okay, you can't have like if the foundation's shot, the VA rehab loan's not going to work for someone that needs to fix the foundation with major structural work or new additions. Okay, you cannot do purely aesthetic upgrades like adding new landscaping and putting in a pool or putting in a home theater. That would all come after the case, maybe with a VA cash out or equity loan. So if you're wondering, where can I get one of these VA rehab loans? Because I've asked around and they're super hard to get. they are difficult to secure and find. Very few lenders offer these loans. Just going to throw it out there right now. At the time of this video, low VA rates is not offering these loans, not because they're not good loans, but because we don't have the expertise that you deserve. But we would certainly like to educate you through this video, and ultimately one day we hope to be able to offer these loans to our veterans. Now, why are there so few lenders offering them? As I said, they're difficult loans to do. There's also some risk. Okay, there's some risk for the lender since the loan is for more than the current value of the property, and we're basing this loan on the project's future value. There's some additional risk there. Now, there's always risk. Okay, there's always risk anytime we do loans, but there's more risk. For example, if you don't do the improvements, or you do the improvements and they don't actually improve the value of the home as much as we expected, there's a problem there for the lender. Now, if this happens, the lender doesn't have enough collateral that they need should you default on the home loan. It also puts you, the veteran, in a tough financial situation if you've borrowed more than what your home's worth. You've now gone into a new home with negative equity. For example, what would happen if you find a serious, unexpected problem during the renovation process? Well, since it's unexpected, it won't have been considered as part of the repair costs. You might not have the money to fix it. Then what are you going to do? That's a big problem. In addition, if the cost for materials and labors rise during construction, that's happening right now with some of the inflation that we're talking about. We just did a recent video on inflation. Well, if labor and material costs are going up during the process, you might not have enough money to pay for all of the improvements that you expected to have to do. Now, for all these reasons, it's going to be difficult for you to find a lender who's willing to do a VA rehab loan. Now, if you're dead set on buying a fixer-upper, I would strongly urge you, before trying to find someone that has VA rehab and reno loans, that you go with a different loan product. There are other products out there that are much more available and are much easier to secure. For example, just some alternatives. They might not work in every situation, but if it's not that big of a fixer-upper and you just need to put in some more efficient windows and some insulation in the house, then a VA energy efficient mortgage might be in your interest. Now, while EEM loans, energy efficient mortgage, some alternatives here, just keep a list. Alternatives, maybe the EEM loan, that's energy efficient mortgage. While the EEM loan can't be used for serious repairs, you can add the EEM improvements to any other type of VA loan you're doing in order to make certain approved energy efficient upgrades to your home. This might include things like solar power, replacing the windows, getting more efficient insulated doors, updating your air conditioning system in some cases. That's what an EEM can do. Now, you can add an EEM to a VA cash out. Something else you might do, if you own an existing home right now and you're a veteran and you've got a lot of equity in that home, you could do a cash out refinance. Whether you're pulling out $25,000 or $100,000, the VA puts no limit on what you're using the cash for. So we've seen veterans tap into the equity of their current home, take that cash, and then use it to buy a fixer-upper and use that cash to get that fixer-upper where they want, okay? You can do that with a VA cash-out loan. Now, however, the home will still need the fixer-upper that you're using the cash-out money for. The home is still going to need to pass the VA's appraisal if you're going to try to then put a VA home loan on that to get your cash back out, okay? Most people are going to take the cash from home one out with the VA cash out loan, go buy and fix up an existing home, and then how do they get that cash back? They'll refinance the fixer-upper. But to do that, you're going to have to meet the VA's minimum property requirements, and you're going to have to go through a VA appraisal. So make sure you do a good job on fixing up the fixer-upper so that it meets VA guidelines for the time in which you want to get your money back out. Now, there's also non-VA loan products out there. If you really want to purchase a fixer-upper, before I forget, cash out, okay? VA cash out. Now we're talking about non-VA loans. If you really want to go buy a fixer-upper and it needs serious repairs to make it, livable in, then a VA loan, like I said, might not be your best option, but an amazing option is the FHA 203K loan. This has been around forever. Lots of people do this loan. We haven't done a lot of them here at low VA rates, but we have done them and we can do them. Okay, it's much more widely available and known. Another option might be Fannie Mae's home style renovation loan, which is a conventional product. My opinion, not as good as this 203K loan, but it's a good product. With either of these non-VA options, you can always use the VA cash out loan after, as I've explained, after you fix up the fixer-upper. If you have entitlement remaining, or if you have sufficient entitlement, you can go do a VA cash out and pay off that FHA loan or that conventional loan, or simply get your cash back if you did the fixer-upper in cash. This way, you still enjoy all of the benefits that you know come with a VA loan, like lower interest rates, the ability to streamline, no mortgage insurance. Always try to put yourself back into a VA loan. So let's wrap this all up. While TV shows make it seem like renovating a home is a fun adventure, the truth is there's a lot of risk involved in doing this. So before you get your heart set on buying a fixer-upper, it's important to consider the risks. And if you still decide to move forward, just know that you might not be able to use the VA loan to fund that project. Anyhow, thanks for watching. This is Eric. Tune in every Friday for more important information about VA mortgages.